nameless in a sea of the dying and shameless.
Recent news at the end of 2021, we acquired the uranium assets of Uranium-1 from the Russians. So everyone remembers the Clinton story and the deal with the Russians. We bought those assets back from the Russians. They're back in American hands. And so now we have these two production platforms. So South Texas is one of the most prospective uranium districts in the world for new discoveries and future production. So we'll be, we want to invest in not only mines here in the US, but globally that'll help meet that that gap going forward. So again, the idea is to provide exposure to uranium early stage in the cycle. We're probably in the second inning of the uranium bull market that we're in right now. And those are two excellent ways to invest in uranium, either directly into UEC as a producer or uranium royalty as a diversified portfolio.
Hey everybody, this is Rob Keens at 𝙂𝙊𝙇𝘍.com. I have a very important first-time guest on the program. It is 𝙂𝙊𝙇𝘍, who is the Chief Executive Officer, President, and Director of Uranium Royalty Corporation, here to talk about the uranium market and developments that Uranium Royalty Corporation has had since we last talked about them on the program a few months ago. Scott, how are you doing today?
Rob, it's great to be with your viewers. Talk about uranium these days.
Yeah, it is. And uranium has seen quite the bull market, Scott. We've been looking at it probably 10 years ago was the first article I wrote on Seeking Alpha as an analyst. And we all saw what we thought were going to be bullish supply demand dynamics, which eventually came to fruition, Scott, but it seemed to take a long time. Was that the longest bear market in uranium you've seen?
Yeah, it's one of the longest. You know, I think uranium is a bit of a unique commodity. If you know your viewers and your investors that are familiar with base metals, precious metals, silver, gold, it's a much more efficient market that acts, you know, reacts to price signals much more real time, and so you tend to have the market clear more efficiently. With uranium, it's not uncommon that we get very low, prolonged, severe bear markets, and then we also can go the other way as the market swings to undersupply. We get, you know, prices go well beyond what the sort of market equilibrium clearing price might, you know, what the economists might say would be the market clearing. And so, you know, that presents with it a lot of investor, you know, risk reward that's quite attractive. And yeah, we have gone through a 10-year bear market where after Fukushima, we had both supply and demand impacts. But after finally the market beginning to rationalize in 2017, 2016 saw uranium production globally peak out and start to drop off dramatically because of the fall off of hedged contracts, something you don't have in the gold market as much. So with the hedges coming off, global production fell. We've been producing 60 million pounds a year of production, less than global consumption of around 200 million pounds annually now. So it's been a massive drawdown of secondary supplies and inventory. Excuse me. And you know, that's coming just at a time when we had some black swan events and other big market events and mega trends that have kind of collided with this supply and demand picture. First, COVID took about half of global production offline at a time when nuclear power plants continued as essential services, so the demand was unimpacted. Supply was severely impacted, which is now only now recovering from. We've had the entry of a physical uranium trust in the name of Sprott Physical Uranium Trust that is bought close to $4.4 billion worth of uranium off the open market and helped clear the inventories. And now with Russia, Ukraine, it shouldn't be as big of impact as it is. In the United States, you would think we're kind of not impacted by Russian, Kazakh, Uzbek uranium supplies. Well, we get about 50% of our uranium supplies from those sources for 20% of our electricity today, 55% of our carbon-free power. So it's a situation where if Russia is impacted by bans, either legislatively or by the Biden administration or Putin embargoes us the other way, we're looking at a pretty significant disruption of supplies in the near term and a longer term refocus on Western supplies, whether it's Australia, Canada, the United States, or any countries that are not sort of under the control of China and Russia. I think you really see a much more strategic, diversified view by the uranium consumers, the electric utility companies going forward.
Yeah, I want to talk about Western supplies here in a moment, but I wanted to start off with the Russia-Ukraine situation. Russia recently has done a couple of things. They pegged the ruble to gold, and they've also requested, or actually demanded, quite frankly, that their natural gas be paid for in rubles. It's quite possible they could do that with other commodities. And Russia is a huge holder of vast natural resources. You know, if they do something along those lines with uranium or other energy materials, how do you think that affects the overall pricing in the Western market? Is that bullish for the Western market?
Yeah, well, I think what we're finding is I don't think you'll find many people out there that don't believe that Putin should be sanctioned for what's happening in Ukraine. It's appalling on so many levels; it's almost hard to fathom. But in a number of countries in Central Europe, Western Europe, and the United States, we've really grown complacent, and we're relying far too much on Russia than we should have. So it's not a matter of if they should be sanctioned; it's more when. So there's legislation before the U.S. House and Senate that would call for an immediate ban on uranium imports, much like is being I think passed the Senate with unanimous support on oil, gas, and coal from Russia. So it's really, how quickly can the utilities wean themselves off of this Russian supply, which in retrospect was a huge risk management failure. But the flip side is there is a robust Western nuclear fuel cycle of uranium producers outside of the Russian-Chinese world that can ramp up the uranium conversion, uranium enrichment. It's just we need those signals to say, hey, we're moving on. I think going forward, you'll have a bifurcated market where Russia supplies its countries and its sphere of influence, and the West has its own industry going forward. So a little bit like back how it was in the Cold War early in my career. They were two separate markets, and we may be going back to that going forward.
Yeah, I think that's key. We just had a discussion with both Chris Temple and another gentleman joined the program yesterday about where we're going with global markets. And it seems to be the end, Scott, of globalization. Maybe we're deglobalizing, and in some countries even de-dollarizing to an extent. We're going to maybe have regional markets. Yeah. Given the fact, with Fukushima and then Germany saying they want to take their nuclear offline, that seemed to be very bearish for the uranium market. But you have China on the other side saying they want to establish 150 new reactors and increase supply. And I think, given the issues we've had here domestically in the US with wind and solar and problems with baseload, which I saw front and center in Texas with the snows last year, which cut power to much of Texas. It seems as though there are competing factors in the uranium market. Do you think overall there's going to be increased demand in terms of new nuclear output? And do you think that Germany is going to come back to the table given the Russia situation with natural gas and say, hey, we need to reestablish our uranium presence?
Well, this is the biggest mega trend to really impact the uranium and nuclear energy story is this realization that the move towards green energy, if it's done poorly and done without regards to cost or reliability, like you've seen in Texas, but we've had in California, in Australia, Germany is the ultimate example where they moved to a green economy, spent hundreds of billions of euros on renewables, and all they've achieved is electricity prices 50% higher than nuclear France next door. They haven't cut carbon emissions by any meaningful measure over this period, and the reliance on Russian gas has had huge implications. So we've got to do, if we want to move to green energy, we've got to do it smartly. Nuclear is really being recognized now as an energy source that's as clean and safe as wind and solar, but it runs 95% of the time, not 30%. And so it's not surprising we've seen 62 nuclear power plants connected to the grid around the world in the last 8 years. We have 54 more under construction. And we're now beginning to see the first wave of these small modular and advanced reactors, which are being built by folks like Bill Gates at TerraPower, NuScale, X-Energy. Some of these are very similar to the nuclear naval reactors, which are just smaller versions of reactors that, if they've operated safely under the Arctic and the Persian Gulf and the Cold War and submarines and aircraft carriers, pretty sure they can be built safely on land to provide scalable, affordable, clean energy, either to remote grids or as part of an energy mix in larger established electricity grids. So yeah, this is really the big move, and it's translated into bipartisan support. I've had the privilege of testifying before the US Senate twice in the last year on nuclear energy and uranium issues, and I've never seen this level of bipartisan support. Folks like Senator Manchin out of West Virginia are very pro-nuclear. Cory Booker out of New Jersey, coming alongside senators like John Barrasso from Wyoming, and coming together and saying, hey, we're for nuclear energy. If we're serious about carbon emissions, you can't get there on wind and solar alone. So that's really the driver of this story. The Russia situation is kind of came out of left field, but the long-term trend here is for greater growth in nuclear power, and that's going to require a lot of new uranium mine development. So, I mean, if investors are looking, how do I play the nuclear energy story? The most direct exposure you can get and the biggest torque to that is going to be investing in the uranium space, whether it's with uranium mining company equities individually, or in the commodity itself, like 𝙎𝙄𝙀𝘾𝙆𝙎 plc out of London, or Sprott Physical Uranium Trust, or companies like Uranium Royalty Corp, which are kind of a hybrid of all these, almost more of an ETF, which provide you exposure to a portfolio of uranium mine developments, of which we have royalty and streaming interests in, and shareholders get that exposure to uranium in a more diversified vehicle.
So back to domestic supplies here in the US, and I would say even North America, do we have enough supply given this additional interest, or do we need to secure more supply?
Yeah, so, our decision to go heavily into our reliance on Russia, Kazakhstan, Uzbekistan was more of a commercial preference, and I think driven more by the predatory pricing practices of these state-owned entities in those countries. When Western producers in Canada, the US, Australia were cutting back supplies because of the low uranium price, they were increasing production to try to drive Western producers out of business. And so because it was a commercial preference, we can move away from it as a preference as well. The United States has over 1 billion pounds of known and likely uranium resources in the Western United States. We have robust industry in Canada and Australia and other countries. So we can easily get ourselves off of Russian uranium in the near term. There may be some price impact, like we're seeing. Uranium prices approaching $64 a pound in the spot market. That's up from $17 a pound in 2017. So it's not without some disruption and price impact, but that price signals we're seeing in the market now will encourage that new mine development. So whether it's companies like Uranium Energy Corp bringing on production in Texas and Wyoming, or Uranium Royalty Corp investing in a number of producers around the world, that will be those 8 to 10 mines that we need additionally to come online in the second half of this decade. It's an exciting time because we really have had underinvestment for much of that decade. That you started following the space 10 years ago. There really hasn't been a lot of new mine development, and it's sorely needed now, and we're probably playing catch up at the stage we're in right now.
Can you talk a little bit about the supply destruction we've seen the last few years as uranium prices languished, in the $20 range for a long time until it, recently popped up in the 50s and 60s. How much supply did we take offline, and how long does it take to get all of that supply back online? Yeah,
so that inefficient nature of the uranium market we spoke to, when markets are oversupplied, it really tends to accentuate that impact, because we have a lot of producers that are selling uranium under hedged agreements. So even though uranium prices were falling below production costs, producers were still producing and selling into contracts. It was only after those contracts rolled off that we began to see producers, and even some of the world's largest producers like Kazatomprom out of Kazakhstan, Cameco out of Saskatchewan, Canada, Langer Heinrich in Namibia, other mines, all cutting back production. And I think, the flip side now is in an undersupplied market, there's long lead times to bring mines back into production, and even longer lead times to bring on a mine that, if it needs to be fully permitted and licensed, you may be looking at 6, 8 to 10 years. Mm-hmm. So we really only have a limited number of mines that can restart to help meet that gap. The additional marginal supplies are going to have to come from mines which can't just flip a switch and produce tomorrow. And that's where we get, 2007, we saw $137 a pound in the uranium price, which was way above what would be the incentive price for new production. But that inefficient nature of uranium is what drives these really high highs and low lows. Again, as an investor at this stage in the commodity cycle, it's very exciting because we really see all the positive demand signals. We see supply is going to struggle. Even the inventories now that are going to be called on even more so with the Russia-Ukraine disruption, we're really going to see, I think, beginnings of a supply squeeze, which could be, we could easily see those highs of 2007 seen again. Whether that's the sustainable long-term price, probably not, but it's easy to see that happening in the coming years.
So describe really quickly what you think your uranium bull market looks like in terms of length and impact. How long could this bull market go for?
Yeah, I think, we try to draw a lot of comparisons to the last bull market, which investors did very well in, but I think this one actually has more legs to it, because if you think of 2007, we had the nuclear renaissance underway. We were building nuclear power plants again, but we still had half the world against us. You had in the United States and in Europe, the political left very much against nuclear power and fighting against it. Environmentalists weren't on board. Even the investment community wasn't completely warm to nuclear uranium investments. Well, now we have the taxonomy decisions in the European community, which has kind of given the green light to investing in nuclear as a green, sustainable energy. Mm-hmm. We have bipartisan support in in the United States, and environmentalists kind of doing the math and science and realizing that if we're really serious about carbon emissions, you're going to have to go with nuclear. So I think we have the makings of not just kind of a flash and crash story here, but a real sustainable bull market as we build out, the next generation of nuclear power plants. And we have to build the uranium mines and the nuclear fuel cycle to support that.
Okay. So I live, in the great state of Texas. I've been here all my life. And I think you're involved with a project here, Uranium Royalty Corporation, which has some assets in Texas. Can you talk a little bit about that company and what the goals are for that company?
Yeah, so Uranium Royalty Corp is the royalty company that's owned by Uranium Energy Corp out of Corpus Christi. And so UEC is the Texas and Wyoming producer, the NYSE listed company. We have 2 production platforms there in South Texas and now in Wyoming. Our recent news at the end of 2021, we acquired the uranium assets of Uranium One from the Russians. So everyone remembers the Clinton story and the deal with the Russians. We bought those assets back from the Russians. They're back in American hands. And so now we have these 2 production platforms. So South Texas is one of the most prospective uranium districts in the world for new discoveries and future production. So we'll be kind of leading the way there. And then in Wyoming, which has been historically one of the largest producing uranium states in the U.S., we're very eager to bring on assets there. And so Uranium Royalty has interests in UEC's Reno Creek project in Wyoming. We also have interest in the Lance project, which is been going through a test mining phase in northeastern Wyoming, north of Gillette. So we really just want to, in Uranium Energy Corp's perspective, we want to be, 2 of those 8 to 10 or more mines needed in this decade that need to come online. In Uranium Royalty's perspective, we want to invest in not only mines here in the U.S. but globally that'll help meet that gap going forward. So again, the The idea is to provide exposure to uranium early stage in the cycle. We're probably in the second inning of the uranium bull market that we're in right now. And those are two excellent ways to invest in uranium, either directly into UEC as a producer or uranium royalty as a diversified portfolio.
So in terms of some of those assets that you mentioned, are they producing or are they going to spin up as we see the uranium price, reach new highs? And if so, when do you expect that to happen?
We're coming off of that period where much of the global production was shut in, but our earliest movers, obviously, we have the biggest movers in the portfolio will be McArthur River and Cigar Lake in Saskatchewan, the world's largest, highest grade mines. They've been in, Cigar Lake was impacted by COVID, more of it's shut down and restart. McArthur River was a conscious decision by Cameco and Orano to keep it down during the low uranium price. They've announced a return to production, over the course of this year. So those will be back in production and cash flowing in the coming months and years. Langer Heinrich is another investment we have, is in a Paladin mine in Namibia, which has gone through a big efficiency and cost reduction program to restart under new economics. The Lance project has been producing in Wyoming and is going through a feasibility study to look at a full restart here in the coming months, hopefully. So yeah, and that's the start. We are very active with probably 6 or 7 files to acquire existing royalties or establish new royalties on uranium projects. So this is really a growth platform. And in the interim, we've invested heavily in physical uranium near the bottom of the cycle, which gives early investors the benefit of that capital appreciation of our physical uranium investment. So it's all intended to give you pure commodity exposure through this royalty and streaming platform.
Okay, Ben, I'm going to put up on screen a slide from the deck talking about who some of the key shareholders are. Can you talk a little bit about who's invested in uranium royalty and why they see such interest in the company?
Yeah, so the company launched 2.5 years ago on the TSX, and we got our NASDAQ listing about a little over a year ago now. The NASDAQ listing really quadrupling our trading volume and kind of putting us on the map in the US investor world. But the company was conceived by some very prominent people in uranium mine finance, folks like Amir Adnani, Marin Katusa, Rick Rule, Darren Millmeister out of Extract Capital, Queens Road Capital out of Hong Kong, Warren Gilman. We all saw this sort of amazing industry emerge in base and precious metals with Franco-Nevada, Wheaton Precious, Sandstorm Royal Gold. And we couldn't believe there wasn't such a vehicle in uranium. So we launched the company. We brought some corporate shareholders along, like Uranium Energy Corp, Altius, Mega Uranium, that vended in assets that got the company off the ground. Also provided some debt or some sweat equity and back office support for a sort of a private company emerging, but really started transform with the public listing on the TSX at the end of 2019, and now off and running. I think our market cap is close to $500 million. If we're not $1 billion company within 2 to 3 years, we're not executing on our plans, because we really think the need for this kind of investment in the uranium space couldn't be more obvious today. And we are the only pure play uranium commodity company in the space presently. That may not be the case forever, but we get the risks and rewards in uranium, and so we're ideally positioned to really take advantage of where we're at in the cycle right now.
Yeah, and I think it's going to be important. Uranium is going to be such a huge piece of domestic independence given the geopolitical situation, but also part of the green energy revolution, because uranium and the nuclear technologies have gotten a lot cleaner, as much of mining has, and a lot of people aren't aware of this, but a lot of the mining and a lot of the energy reactors have gotten a lot cleaner. We'll be speaking about that at the Strategic Investment Insights Conference in May, and I just want to put this up on screen for anybody who wants to come. I'll be on the macroeconomic panel with some other gentlemen speaking at this conference, and I know UEC will be there as well. at the conference. So if anybody's interested in talking to UEC, they'll be there at that conference along with me. And Scott, will you be participating as well?
Yeah, absolutely. I'm looking forward to being part of this. We love the platform of the Strategic Investment Insights Conference in Chicago, and so we'll be there. I think present with a booth and presenting on the Saturday of the conference. So excited to be up there and getting back to in-person conferences again. As I know we're all excited to meet in person again. So part of that, and looking forward to it.
Yeah, it'd be great. I know it's been a couple of years since we've all done this. Seems like the conferences are starting to rotate now after some delays earlier in the year. So definitely excited to get back on the road and do that. And Scott, we'll see you there up in Chicago, May 5th and 6th. And anybody that's interested, if you want to go to that conference and see me speak or speak to Scott and UEC, you can simply go to strategicinvestmentinsights.com and register for the conference there. Scott, any closing final comments that you have for the viewers?
No, just it's exciting times, in commodity space in general, but I think uranium is probably as well situated as any commodity today and has a really bright future in terms of long-term bull market that's underway. So I encourage you to look at Uranium Energy Corp and its sister company, Uranium Royalty Corp, is two excellent ways to invest in the uranium story.
All right. Thank you, Scott, so much for joining us on the program today.